Assalamualaikum warahmatullahi wabarakatuh. To our macroeconomy lecturer, Miss Maizatul Saadiah binti Mohamad. Before we start, I, Mohamad bin Burhanuddin, and my team members, which is Amirul Ashraf bin Jailani, Nasrul Hafizuddin Alzam bin Nasri, and I, Qushairi bin Azmi, from class MSc 1104C, will present about the money, banking, and the financial system. Before that, I will explain about the definition of money, which is anything that acts as a medium of exchange. Money is any commodity that is generally acceptable as a payment of goods and services. Okay, in this slide, it's talking about the evolution of money. The evolution of money is started as a result from the weaknesses of barter trade system. Barter trade system fail as there are difficulties to meet double coincidence of wants. So there are 7 types of money, which is the commodity money, metallic money, paper money, token money, fiat money, bank money, and plastic money. Next, function of money. Firstly, as a medium of exchange, which is money can remove the inconvenience. Secondly, as a unit of account. In a barter system, the value of goods are very difficult to determine, but with money, the value of goods and services can be expressed in one common measurement. Thirdly, as a store of value. Since money does not decay easily, it can be stored and can be turned into other forms of wealth easily. And lastly, as a standard of deferred payment. The characteristic of money, which is stable in value and durable, enable individual to use it as a method of payment at future dates. Money enable buyer and seller to do trade using credit system. Okay, so we are looking into the characteristic of money, which is the recognizable, scarcity, stable in value, portable, divisible and standardized, and durable. Next, Keynesian demand for money. Firstly, transactionary demand. It conducting everyday transaction such as paying for food and transport. People hold money in the form of cash to conduct daily transaction. Directly related to the level of income, the higher the income, the more money is required for increased spending. Secondly, precautionary demand. The demand for liquidity to cover unforeseen expenditures such as an accident or health emergency, which is uncertainties. The demand for this type of money increases as the income level increases. And lastly, speculative demand. The demand to take advantage of future changes in the interest rate or bond prices. The higher of the rate of interest, the lower the speculative demand for money, and the lower the rate of interest, the higher the speculative demand for money.
Okay, so my name is Amirul Ashraf bin Jailani and I'm going to explain about supply of money. There are 3 types of money, which is M1, M2 and M3. The first one is M1, which is narrow money. In narrow money, we have transaction money or money which can be directly used for transaction, and currency, checkable deposit and demand deposit. The formula for M1 is fiat money plus checkable or demand deposit in financial institution. The second one is M2. M2 is M1 plus new money. Okay, the first is M1. The second one is savings and fixed deposit in commercial banks. Next are Bank Negara Malaysia certificates. Next is repurchase agreement repos, and the last one foreign deposits in commercial banks of Bank Negara Malaysia. Okay, there are two formula in M2, which the first one is M1 plus narrow new money or quasi money, the other names, and the second one is M1 plus savings and fixed deposit in commercial banks, plus NCDs, plus Bank Negara certificates, plus repos and plus foreign deposit in commercial banks or Bank Negara Malaysia. The third one is M3, which is broad money. In M3 we have M2, and the last one is savings and the fixed deposit in other financial institution. Okay, the formula for the M3 is M2 plus savings plus fixed deposits plus NCD plus repos in other financial institution. So I'm going to proceed to the next slide. Okay, this next slide will contain is central banks and its functions. Okay, the first function of the central bank is issuing and managing the country currency to ensure currency stability. The second one, acting as a banker and financial advisor to the government. The third one, overseeing monetary policy. The fourth one, holder of the country's stocks of gold and foreign currency reserve. The fifth one, being a banker to the banks, and the last one, the lender of the last resort to commercial banks and the government.
Okay, so my name is Nasrul Hafizuddin Alzam bin Nasri, and this is a monetary policy. So basically, this is the principal objective of monetary policy. So there are four, which is achieve full employment, maintain price stability, achieve higher rates of economic growth, and achieve balance of payments equilibrium. So the first one is achieve full employment. Achieve full employment is the important goal because unemployment can lead to wastage of potential output and can loss of social standing and self-respect. So the second one is maintain price stability. This is because fluctuation in price bring uncertainty and instability to the economy. And the third one is achieve higher rates of economic growth. This can increase the real per capita income of a country over a long period of time and also can increase the standard of living for its population. And the last one is achieve balance of payments equilibrium. And this is to sustaining a balance of payments with the rest of the world is a macroeconomic objective, because an increase of deficit in the balance of payments can reduce the ability of an economy to achieve other objectives.
Okay, so for the next slide is I'm going to explain about monetary policy, the types of money policy and the tools for monetary policy. Okay, there are two types of monetary policy and the two types of monetary tools. The first one for the type is expansionary monetary policy, and the second one is contractionary monetary policy. Alright, so we're going to proceed for the tools, which the first one is fixing margin requirements, and the last but not least, direct credit controls on bank lending.
Now we continue on the credit creation process. So there are 8 explanations of the process of credit creation. So the first one is cash reserve ratio is fixed by the central bank. And then there are many banks in the banking system and each customer deposits money in different banks. Next, we have banks only have 2 types of assets, which is cash and loans. Next, commercial banks do not keep excess cash reserves, and all excess reserves are loaned out. And then all transactions are made by checks. Next, the public must keep their money in the banks, and all deposits are only kept in the form of current accounts using only checks. And then we have leakage do not exist because there are no withdrawals from the banking system. And the last one is banks have only one liability, for example in the form of deposits.
My name is Qushairi bin Azmi. Today I would like to explain about commercial bank function. Commercial bank function have 4 functions. First is accepting deposit. Current deposit are payable on check, which is demand deposit. The bank provided facility and does not pay any interest for current deposit. And individual household deposit them saving to earn some interest. Second is providing loans and advance, such as housing loans, car loans, business or personal loans to the public by charging an interest rate to earn profit. Next is the loans are given to the lender in the form of direct loans, overdraft facility, cash credit, discounting bills of exchange or money at call. Third function is providing other banking service and facilities. Providing facility for rate, exchange transaction, issuing bank draft, check and traveler check, purchasing and selling stock, exchange securities, safe deposit box, and providing credit card facility and insurance coverage and other. Lastly is credit creation. It is a unique function. From the deposit received from depositor, commercial bank provided loans and investment to its customer. In the process of granting loans, commercial bank managed to earn profit and increase the money supply. Next is limitation of credit creation. Limitation of credit creation is although commercial banks have the power to create credit, their power are not unlimited. Their, their power to create credit is limited by the factor. The factor have eight, which is amount of cash, banking habits of the people, availability of borrowers, business condition, cash reservation, availability of collateral securities, excess reserves, central bank monetary control. Lastly, I will explain about type of Islamic banking. There are five types in Islamic banking. First is Al-Wa'idah, refer to true agreement between the owner of the goods with the bank as custodian for safekeeping, does not provide the depositor with the right to receive a share of the profits, not allowed to promise any reward in the form of profit or gift. Second is Al-Mudarabah. It is a profit sharing between the depositor and the bank, when by both parties agree to share the profit from investment or business ventures according to a mutually agreed ratio. The bank will pay the agreed profit sharing ratio. Third is Al-Bayi Bitaman Ajil, refer to the sale of purchase transaction for the financing of assets. It involves the bank entering into a property purchase agreement with the customer. Fourth is Al-Musyarakah. Any profit derived from the venture will be distributed. The common feature have three, which is both partner together raise the joint venture working capital. Both partner shall manage the business. The profit sharing ratio has to be decided by both partner prior. The last type of Islamic banking is Al-Ijarah. It provides services and goods temporarily for a wages. The owner rent and the lessee in given the right to use the project for a specified period of time for fee. There are three types of Al-Ijarah, which is lease ending ownership or lease with ownership, which is Ijarah wa Iqtinah or Ijarah Muntahiyah Bitamlik. Next is operating lease, which is operating ijarah. And the lastly is forward lease, which is ijarah mausofa bil timah. That's all from to me. Thank you. That's all from us. Thank you so much and Assalamualaikum.